Yeah, we're live. Good morning, good afternoon. Welcome to the stream. So, where are we? Let's see. What do we have here? So, let's take a quick look at the dollar from the should always start your analysis from the weekly time frame. So, the dollar has been rallying through the week, and this is the drawn liquidity for the dollar. Let's slide that down. The XY. That is 107.348. That is the drawn liquidity, the weekly time frame for the dollar. So we've been bullish for the past 2 months on the dollar, expecting higher prices, and we traded up into this fair value gap, this CB, on Wednesday and Thursday. On Friday, during London, we rallied higher. So we'll be expecting price to come to this liquidity void, resting here. So this is a liquidity void. The liquidity void is a body of price action where there's no trading at all. So as you can see, in this body of price action, there is no price from Wednesday's closing to Thursday's opening. There was no trading. Yeah. So price just dropped lower. So there is inefficient price delivery here. That means we will be expecting price to trade back up into it. But first, we should get inside of this fair value gap low. This low. That is from this low to this high. This will be the fair value gap. So we'll be expecting price to first trade here, then the midpoint of the fair value gap, which is here, which is 106.419. That is the CB, daily CB. I'm currently jotting down, so I'm repeating the figures in my journal. Daily CB consequent encroachment is 106.419. Okay, so that's the current drawn liquidity for the dollar for today. Before going higher, I don't really expect the dollar to draw up to this places. So this 107.348. I would like us to reach there by next week, but we can just do everything today. So let's see how it goes. So for the 1 hour, okay. So traded to this order block by the week of the daily order block. This is the order block I'm referencing. This order block here, this last down close candle before this energetic move higher, which dug into this fair value gap. So this is the order block and the consequent encroachment of the week. Because of this when the other block has a wick like this, you reference the wick of the other block. So you know, so you use the midpoint of the wick, the high of the wick, and the low of the wick. So the midpoint of the wick is 103.995. So we dove into the midpoint of the other block, of the bullish other block, and valued higher, making Tuesdays the low of the week for the dollar. So let's take a quick look at the ES, which is US 500. Okay. Let me take this one off. We've been rallying higher for the years, but okay. Previous monthly low. This is the previous. This is the previous monthly low. Currently, my bias for the ES is currently bearish, going into May. That is April and May we should be expecting lower prices. So this is the previous monthly high. So the first week of April we had a rally out to take out buy side liquidity. Yeah, so they get down inside of this fair value. So they should, this weekly BC here should be acting as a fair value gap, as an inversion fair value gap on the weekly. So weekly inversion fair value gap. So let's see daily. This slow and this slow, really slow, they are suspect lows. I like these lows. So let's focus on the passive and fundamental. So from the previous monthly high to the previous monthly low, that is the range, the daily range of the lows, the equilibrium price point for the previous month. Previous month equilibrium is 5159.3. So we keep digging inside of this, ranging inside of it. But I'm expecting lower prices for it, so let's see how it goes. But this is a bullish order block here, which is a discount body of price action. Discount bullish order block. What is this low? This low is 5128.7. Slow is 5128.9. Relative equal lows. Okay, we dug down inside of this bullish order block yesterday and today also. This is buy side. This is a 1 hour bullish order block which we recently traded back into. Let's see if we live. Thanks, Smith. You're welcome. I really do. I appreciate your kind words. So I just get to see the chart. I'm only using one screen to analyze my chart and everything. So I have to look at. So I can barely read the chart coming in, but please keep them coming in. I do appreciate it. It makes me know that I'm not alone here trading. Even though I'm just tape reading. So this was a bearish order block. So if you can frame it going both direction, if you can frame it going up and also going down, it's of low probability because we're currently at a discount. We've traded into a discount from the from the previous month's range, which was this high here and this previous month's range low. So we traded into this discount here, and there are relative equal lows here. The low here is 5128.7 and 5128.9. That means this low here didn't take out this low here. But price action like this I see it as a form of manipulation. So when it does something like this, it's better to stay on your hands and watch price deliver. So we want to be trading when it is predisposed to go in one direction, because currently you can frame it for a long and you can also frame it for a short, but I'm currently interested in, let's see what's my bias for the day. We are currently below the midnight opening price. This is the midnight. Yo, I'm sorry about my mic. I know my mic has been shaky, messy, because I'm currently using the pin up mic, not the usual mic where you keep on stand on the table and let go. So this is taped to my top. Okay. So this is currently a scalper's territory. So for anything you want to do here, it's better for you to just go in and out, take out your 5 handles or your 3 handles or any model you're using to trade, any style of trading you're using. So let's delve into lower time frames. Mistake. Go back. And today is Friday, so it's best for you not to mess up your progress for the week by trying to trade Fridays when price action is like this. So this is the 15 minute fair value gap here. So we had a rally up to the midpoint of it. So this is the 15 minute fair value gap. So this is also the 9:30 opening price. So we're currently below the midnight opening price and below the 9:30 opening price. So expect price to come to this bullish order block here. So we'll know what next to do. So from there we'll know what the narrative is in play. So this is the midpoint of the 15-minute fair value gap. So we had a rally up to the midpoint of it and we're trading down. Let's see how many handles it gave. So from the midpoint to current price it's been 17.6 handles. So it's been 17.6 handles from now. So you want to check the handle because typically when price gets to a PDRA, it typically trades 5 handles plus. So it trades 5 handles, then 10 handles, like that. So 5 handles is kind of a guaranteeing price action, even though your bias is wrong, even though you do not know where the drawn liquidity is. So you can get 5 handles of price action daily without knowing where the drawn liquidity is on the higher time frames. Even though I don't advise you to trade that way, except you have to trade that way. So we got to a premium price and we are currently still trading in a discount array. Let's see potential. So this is the 15-minute fair value gap, and this was the weekly inversion fair value gap, which we traded inside. We reached inside of, had a drop lower and got to the low of the inversion fair value gap on the weekly at 8 o'clock. So the move has already taken place. A large move already took place before the opening price from New York, about 36 handles, which is quite a lot. So let's see the telegram window. Okay. Static. Let's see the Nasdaq. So the Nasdaq took out this buy side here. Took out this buy side here. That is leaving this CB. This is BC. So the BC was still here and this ACB was here. So this price range of price action here is not balanced. It has offered sell side, so it has offered buy side and sell side. So for it to be balanced, it should trade back up inside of here. But there's relatively colors here, which was tapped. Okay. So this is the current range we're dealing with. This to this, the discount, and this range. This we're coming from a premium to the discount. So these are the discount PDRAs. Yeah. This is a fair value gap here and a discount. Discount fair value gap. Premium fair value gap, which is BC. So the Nasdaq has traded below its 950 low, while the ES is failing to trade below that low. So we created this fair value gap here. This is the same fair value gaps as seen in the ES, which went to its midpoint. But the Nasdaq didn't go to its midpoint, so Let's see if it's interested in this sales liquidity here. The Nasdaq is failing to come to take out its 9 a.m. low, while the ES is failing to take out its 9 a.m. low, while the Nasdaq has done that. So let's see what it delivers after that. This is simply just psychological warfare, because it has already done its majority of its move before the equity open. So from London, pre-New York opening price, pre-New York opening time, we've been dropping already. So it's currently consolidating, currently seeing a form of consolidation here. Before we move forward, I'm currently interested in gold price. Oh, we've been live for about 30 minutes, which is nice. Oh, it's quite moving fast. This is a fair value gap here. So if it's to drop, it should drop now. It should drop now if we are to go lower. If not, we should be aiming for buy side. So this is sell side here, which is unlikely. And from this fair value gap here, so for this range, the eye is low here. So we got the midpoint of it, which is in the eye here was 5161.9. So let's see how price trades inside of this fair value gap. If we're wanting higher prices or lower prices, but it's likely lower prices at least, because we've already traded inside from the midpoint. So from the midpoint to here, so you should give at least 5 handles first before determining where it wants to go. And 5 handles is just above the midpoint of this bullish order block, which is the mean threshold. So we should trade at least down to this mean threshold. Because we went above the above the 930 opening price to draw lower. So in the grand scheme of things, if you're using sorry, I'm hearing a weird sound outside of my house. Oh, sometimes the commentator isn't Michael. I'm not Michael. The handler of this YouTube account is not Michael. I'm just a student. So the this live is just like a part-time gig. Let's put it that way. So I'm not Michael. I keep trying to help like tell people this. I don't know. I don't know what words to use. I'm not Michael. I'm just a student. I'll write out a disclaimer to to inform people, because you're not the only person making this comment. There's been multiple people making this comment that are Michael, that is ICT. He has only one YouTube account, which is the Inner Cycle Trader. So that is only YouTube account. This YouTube account is just a an account for that posts motivational videos and his speeches, which was taken from the Twitter Spaces that I did from 2022 through 2023. So that's it. That's the storyline behind this account. So I'm not Michael. So back to price action. So we should expect this main threshold should act as an inversion to take price lower. So it will be like support broken turn resistance here, taking price lower to this sell side liquidity, which also coincides with this discount daily bullish order block. Yeah, I want to see how it does act here, how price acts here. So above the bullish order block is a premium of that PDRA, and below it is a discount. So we've dug up to the equilibrium point of the order block. Which order block? This order block. Yeah. So that's the narrative in play. So from the premium of the order block down to the discount and below it. I don't know how you guys got the impression that the handler of this account is Michael, and I've done multiple streams in the past, and I've done multiple write-ups on the community tab to disclaim that I'm not Michael. It, it's quite obvious that Michael is a master communicator. The way he communicates his idea, for you to for you to be able to communicate the thoughts, the idea that are thoughts in your head, to communicate it in conceptual form to another person, and the person will quite understand the logic you're trying to convey. It's quite impressive. It's something, it's like a gift. It's not something everybody has, especially ideas like this that are totally abstract ideas. They have not been the idea has not been written in a book ever. It's a new form of idea, a new form of thinking as a trader. Even though most of the ideas, let me say all of the ideas is given out, is um, has already been taught, but they were taught in other formats, like for example in the Bible. So most of the ideas that Michael is giving out has already been illustrated and explained in the Bible. But there's a way Michael was given like the gift to know how to turn that idea and relate it to trading. Does that make sense? Because everything relates. Everything relates. There's for it to be true, for this idea to be true, as Michael taught it, it should be true in all aspects of human endeavor, or like it should be true in all aspects. So because the word of God is true, and where Michael got the inspiration from and where he got the insight, let's put it that way. So because that format is true, so that is why the algorithm is obeying the PDRAs, because the PDRAs are not random. They are something we are seeing here. They are not random PDRAs. They are not random points in price action. So we could see it plainly. Is the six Nasdaq, because the Nasdaq already took out this low and the ES, so we expect the ES to draw down to take out this low. And you should trade to the low of this low. Let's reference the low I'm trying to draw your attention to. So we've dropped below this low. So we've taken out sell side after rallying up inside of this fair value gap. So how low should we expect price to go? Let's see. So if you take your fib from here to here, let's take this out. So if you take your fib from here to here and put target, this is how low you want it to go, how it should go. So the first target price point is 5136.9. That was the first target price point. That is taking this range, using this range as a projection range to project how low it's going to go. Where you be wanting to fall for the trick, for the disguise. You see other people switching approach, switching methodologies. So you want to like jump on that new thing. So you should look for a process to keep yourself in line with following your own process. Does that make sense? Because it's easy for us to derail, to try to do what others are doing. when you see them switching methodologies, they are all looking for the alt new thing. They are not necessarily looking for profitability. They are not looking for one thing that works, that repeats itself continuously. They are looking for what everybody is doing, and that is what they want. And you do not want that. You want something that works for you. Turn resistance, which I don't want that logic to play out. When you're trading and you see price actions, every time every time there's a retail idea that is every time you see a retail idea that is opposed to smart money's idea, smart money idea will always win every single time. So you want to see a confluence of your idea merging, trying to merge with their idea. When you see that conflict in price action, you should be not being cocky and go and throw maximum leverage on that position. But what I'm trying to say is that there is always, most times, a possibility for their idea to be wrong and, and smart money's idea to be right, because that's how the algorithm is designed. The algorithm is designed to go the grain, against the grain I was talking about, that everybody is trying to do the same thing. So because everybody is trying to do the same thing, the algorithm is aware of that. And human nature we mostly get entwined with group mindset, with group mentality, which keeps us in that loser's mentality, because something that is working for one person, because of the glamorous approach that the person like posts on social media or stuff like that, you see that and you think that is what you want. You've forgotten your process, you've forgotten why you started trading, you've forgotten everything. Like, you throw that out of the road to follow what others are doing, which is wrong. So back to the trading. So we want to see if this sell side liquidity here, which was support according to the others' ideas, this was support broken, turn resistance. So you fail to respect it here. So they will jump in. When it came here, they will jump in like most of the time. So when they jump in manually because they lack patience, one of the characteristics of dumb money, that is the people that are not aware of how controlled this market is. One of the characteristics of them is that they lack patience. So they will jump in here to sell short because they see price dropping lower here. So they'll jump in here. So let's see if we get a run up to this fair value gap. Okay, no. It seems price is very eager to drop lower to this 1.5 standard deviation target. These are target one. If it's bearish as it seems currently to this 5126.9, which is the 2.5 negative standard deviation target level. We are still watching to see how price reacts. If it does react to this fair value gap here, is of interest. But we are currently extremely bearish. So let's see the euro. I've not looked at the euro this week. For the euro, we've been expecting our prices since February. So let's see what it's been doing. Naturally, because the dollar has been going up, the euro should be going down. So you see, took out buy side here, which is here. We're coming for these lows because we've traded back up into this bearish fair value gap, which is here. Let's take this all off. So we traded back into this bearish order block. So we're coming here, which is sell side. Too many lipsticks in price action. So this low was broken. Fair value gap here was created and price traded inside of it. So we've taken out we've reached the first target, which is the negative 1.5 standard deviation. So the second target should be here. So we want to see how price acts before dropping down to this point. So from here, from 5160 to 5136, we've dropped about 25 points, which is pretty decent. And from this fair value gap, this is what if you trade the 10 a.m. to 11 a.m. window, this is what you will see as the silver bullet, or what you call silver bullet. So price breaks this low here. First took out buy side liquidity here, which was resting here, went higher, broke this low here, entered the first entry here. So this is the first silver bullet here at 10:01. So this was the first silver bullet here. Price drew lower, left this gap unfilled. So this unfilled gap, now it's a breakaway gap. I don't think this traded inside of it. The high here is 5163.3, 5163.3. So this is like an institutional order flow entry drill. Trying to see. See how price reacts after coming in contact with our target. So this is one of the proof that this is all manipulated and controlled. As you can see, there is no buyer. There are no buyers here waiting to buy the ES to draw it higher. This price reacting from this negative 1.5 standard deviation target, and it does that here cleanly. It's clean as a whistle. Alright, so it's about 4 minutes and we'll be done with the live. Thank you for tuning in. Do leave a like if you enjoy the stream. We should be having more quality streams as the day goes by. We're just using one laptop and a new mic, which seems to be receiving echoes. Because every time I play back the videos, the voice echoes back at me. So I don't know. Hope we got that clear. 70s work needs to work. So I'm in no way related to Michael, apart from the fact that I'm a student and I'm using this concept. That's all. I'm an independent actor in this space. Let's see how far it acts in this fair value gap here. So at 11 a.m., that's when the stream typically closes. So if you're just joining in for the stream, this is what we did. We got the fair value gap here on the 1 minute time frame, which was the silver bullet, which traded above the 930 opening price. So if you're seeing this as a candle from at least 1 hour time frame, it will be represented as this. So it will be open, so it's opened, dropped lower, to be represented as this. Let's put it like this. So it will be like this. Let's follow it as it was. So it will be like this. Then the 930 opening price was here. So if you miss the first entry here, it's in this first body of price action. If you miss this first entry prior to the rally up above the 930 opening price, let's see from here to this 930 opening price, all all sales will form above this 930 opening price, which is here. This is what we're trying to reference. So you want to sell when it's above this 930 opening price. You want to sell above opening price. So if you sell above this opening price, your stops generally should be at the high here, or above the recent swing high which was formed, which is this. So if you are to form this as a body of price action as a candlestick, this is what you get. So when you're trading, all sales, all high probability sales should be taken. How's this? Trying to illustrate something. So let's say we had a drop here. This is another way of illustrating this right now. Let's say we had a drop from here. So when you're looking for sales, you wait for price to go above the 930 opening price. So when it does that, and it's inside of a fair value gap here that you've been anticipating, that's a trigger. So when it does that, then you expect lower prices. Let's follow the narrative we're using for this particular trade idea down to this thing. Because when you take this range from here to this high and you project it down, it will give you this target here, which we did here, projecting the 50 feet from this high to this low here. Price traded down, went back into the premium range, the premium of this range, got the sell trigger, and price valued lower. Alright, it's already 11:02 a.m. So I'm going to complete some things, and we'll be back next week Tuesday for another stream. Thank you all. and God bless.